So inflation data has been super important to monitor with the markets lately, and we're going to take a look here at the E-mini S&P 500 futures December front month chart to get ready for the next round of inflation data that's coming out here. So before we look at the charts, important reminder, trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. If you're new here, my name is Hema Reddy, and I use price action, market timing, and momentum to help traders boost their trading. So what I'm seeing here is something very interesting. You may have been paying attention to the markets when on September 13th, we got the August CPI data. So again, there's a key metric of inflation, and the market just tanked. And then it continued to tank from there, stabilizing on October 3rd. Now there's a brief recovery, and for my Skinny in the Mini members, I was forecasting that recovery to extend into Friday, October 7th, and reach about 38.45. You can see we fell shy of that. We capped at 38.20, about 25 points away from my upside target, and we did 2 days early. So in the world of forecasting, what this means is that the market is weaker than the cycle I projected. And if you want to learn more about cycles and being able to forecast for yourself in any market and any time frame, I teach that in my loss forecasting trading system. So now let's look at where we are heading into the upcoming Thursday, October 13th report. Okay, that's this maroon line here. That will be when the next set of CPI data comes out, because it's likely to be market moving, especially if the data is hot, meaning that inflation isn't slowing down as much as we all hope. So right now, we have weakness coming off that October 5th high, as I mentioned. The RSI power zones on the daily chart, so this is my favorite momentum indicator, they are continuing to weaken off a recent peak here at 46.34. And that action gives some scope for the market to continue lower. However, when you look at the E-mini on a weekly time frame, and I dig into this at the beginning of every week, again in my Skinny in the Markets, where I'll detail more with members, the weekly chart of the ES is not looking quite so scary. We are seeing a disconnect between price and momentum that might be a cushion for further upside. So how do you put all this together? Well, any data point that you come into in the market, right, whether it's Fed data or inflation data or anything else, you come in and you lay out your game plan, guys, all right? You should come in and be like, I am monitoring these key levels, and if the volatility surges such that there is an attempt at these levels, I know what I'm going to do next. So what I'm seeing here is that this level that I just pointed out, 3820, that's quite important. So I use blue for resistance or price ceilings. If the market pushes higher than that, then 39.3625 would be the next important level. So we're just going to look at two either way now, again, to kind of get an idea of what we're heading into in the short term. On the downside, we have support at this contract low. And there is support down below. You just can't see it on this chart because this is the E-mini S&P 500 contract chart for December. That's Z 2022. There's two ways that I discover support in a market that's falling that looks like it has nowhere to go. One is to use a continuation chart. So that would be at symbol ES on TradeStation that I use here. Or I use variations of my forecasting where I go beyond the forecast. And those give me projected areas of market support. So one level that I'm going to look at here, all right, would be if the current downside scenario continues, what would my next forecast be? Now that next forecast is taking me all the way out to October 26th. So that's quite far away from where we are now. So let me just plot October 26th on the chart, just so you have some idea of what that looks like, okay? So if we keep falling off of the October 5th high, then the next key timing point would be October 26th, but that's only if this 3820 high stays intact. And the price target that's associated with that, okay, don't freak out, don't panic, but if the market continues to fall and keeps pushing, there's room to get to about 32.15. I'm rounding, but that's where we might see the market go. So this intersection right here, October 26th, 3,200 almost on the S&P. Now, when I say there's a forecast, guys, I don't have a crystal ball. I don't know if this is going to happen exactly, but it's kind of like driving with a map and having an idea of where the turns may be, and then you deal with the real life situation of the road when you get there. Just like my recent forecast about this bounce and where it might end, it was just shy of the target in both price and time, but it was still extremely helpful. And as soon as that unfolded, I got my traders looking at selling and kept them on that focus. So this intersection down here is where things could end up if things go really sour, okay? If we have hot inflation data, if it fuels or even, picks up the Fed's plan to hike rates. But if things have cooled off, then we would remove this from the chart and we would focus on some of these resistance levels up above and see what unfolds. Into the data date, again, Thursday, October 13th is when CPI comes out, as well as the day of the data and everything after that. So you can use loss forecasting tools to do this type of analysis for yourself on any market, any time frame, and you can follow me in the Skinny in the Markets to get my latest, greatest analysis on the E-mini S&P 500 futures almost every trading day, multiple times a week, and much, much more. So I really look forward to hearing back what you found valuable from this video. Please share in the comments down below. Join my tribe if you haven't already for more content like this, and I'll catch you on the inside. You can sign up at the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.